Morning. Thanks for having me on the show, Mahendra. I think what we are making out from the completion of the market at this point is, yes, of course, the entire world is readjusting or sort of repricing debt as well as equity. We know that we are going through the earnings season, which so far has actually been good, to a surprise of a lot of participants. I think the numbers have been good. The management commentaries have not been as dismal as they were expected. There are price hikes which were taken across the table. Yes, if you talk about global macros and if you talk about Indian macros as well, increasingly 1 week back things were looking brighter. But with interest rates on the rise in US, which almost the markets knew, and also in India, a rate cut ahead of the policy in June, signaled that yes, somewhere down the line, inflation is hitting us. Inflation is not transitory as it was earlier forecasted in US and now in India as well. It seems that it will stay with us. It's a sticky inflation that is staying. So in higher inflationary environment, higher commodity prices, as well as in a higher interest rate environment, one needs to revisit the portfolio, realign those companies which probably were just benefiting because the last 2 years were a rally where everything and anything worked very well. To answer your question, what should HNIs or retail investors or even a lot of people who are interested in Indian equities? Yes, it's time to sort of realign the portfolios. A lot of cyclicals have done well. Again, I'm not suggesting that sell off every cyclical, but probably the time is such that the valuation readjustment and the pricing that has come for a lot of blue chips, a lot of great companies which are so-called market leaders, emerging market leaders are right now sort of risk reward is getting better day by day. So my sense is, yes, I can go wrong by say 5 percentage points or 10 percentage points or 3 months, 6 months here or there. But it's a good time to start sort of accumulating greater businesses, good businesses, which sort of serve your purpose for the next 2 to 3 years.
The kind of rout we witnessed in the broader markets was really unnerving. And Kunal, I want to get in your take on some of these stocks on the charts. India Bulls Housing, for instance, smack down, Dishman Carbogen, double-digit cuts coming in. What are the charts reading?
So India Bulls Housing has been a weaker chart, Avan, I think right from, the time when the stock was out from that Nifty 50, basket. I think from there we've seen consistent amount of weakness. In fact, the stock is now, if I'm not wrong, very close towards testing or breaking even the pandemic lows for itself. So it was almost at, the stock was almost at 85 or 90 odd rupees from, the pandemic lows, went up to almost 270, 75. And now it's corrected more than 50%, 60% of that entire rise, and now it's come back to almost 110, 111 levels. So it's been a weaker chart structure ever since. So no major concern coming out that the stock is trying to change its trend. It's been a weaker chart, so it tends to participate much more when the stock or when the market gets into a corrective phase overall. Dishman Carbogen, on the other hand, as well as been showing signs of weakness. The last 7-8 months have been particularly quite weak for the stock from 240 to 50 levels mid of 2021. The stock has been consistently making a pattern of lower highs and lower lows. Yesterday, after the fall, the indicators have come back into an oversold territory, but the only concern is that the market continues to behave in a volatile fashion and the market continues to show signs of weakness on a relative basis, we could expect that these stocks may continue to drag a bit more and the indicators would remain oversold for some more time. So I believe that rather than looking at a contra buy into these kind of names, one should try and avoid these stocks completely, at least from a very near-term play.
Okay, fair enough. Devang, let's zero in then on Tata Motors in particular. When it comes to earnings, what is exactly that you're penciling in with the overall JLR performance? Do you think that we are likely to see some sort of an improvement in the quarterly performance? And is this a sort of precedent as to what we could see for the upcoming quarters?
I think rather than the numbers, the street is more or less sort of contemplating how the management commentary pans out. Most importantly, on the semiconductor shortage that we all had experienced and was the talk of the town in the last 6 to 9 months, and how that has affected sort of the prospects of not only Tata Motors but other companies as well. So Maruti talked about that briefly in their earnings. So that's one monitorable. Yes, Tata Motors represents the entire, I can say, the global sort of auto environment at this point, or the sentiment for the auto business at this point of time. Again, Europe, China, US, what are the trends over there? How are the sales panning out? Plus, of course, how are the numbers panning out in terms of higher raw material cost, what this company experiences and whether the company has pricing power. The most important part, yes, of course, the India business, which was not much of weightage if we were talking a couple of years back, is now gaining momentum. the EVs, the Nexon, which sort of has created a revolution in terms of every third car sold in India is Tata Motors electric vehicle. So my sense is that yes, India business also would sort of carry some weightage, and how it pans out or how the EV trends are emerging in India, that's also one monitorable. Yeah, I think the numbers could probably, as I said, or not upset the street much, but the commentary would sort of make or mar the prospects.
Sure, okay, that's the take coming in.